Time for the Tesla weekly update, and this is the weekly chart for Tesla on linear scale, and this is probably the most important indicator to use right now in regards to Tesla. It's from the most recent high right up here back in December of 2023 to the low, and it's just stuck in between the 236 and the 382. So it can't really break above this 187 level, and it's not breaking below this 168 level. So this is really the most important thing to look at right now. But let's just put on the other indicators as well so we can take a look. And when we put on the SMAs here, yeah, so the conversion line of the Ichimoku lines up perfectly with the 236. And the 21 EMA, that one sits at 183.76. So did we get a close above the 21 EMA this week? No, we did not. It closed at 183.01, right? So that is essentially still resistance too. So there's more confluence that this area is resistance with that 21 EMA. So essentially, if you can break above that 187 level, then I think there's going to be a clear shot up to the 0.5 level, 202, which kind of lines up with the bottom of the Ichimoku. And it lines up perfectly with that blue line on log scale, which I'll show you right now, right here. So yeah, that 202 area lines up almost perfectly with that blue line right here on log scale. And there's another Fibonacci from the log scale July of 2023 down to the low, and we can see even more confluence of what's happening right there. Of this 186 level is the 382 and its resistance as well. But like I said, once we can break above that 186, 187 level, then it should have a clear shot to this blue line or that 200, 202, maybe $203 level right there. But still, when we take this off here, we can clearly see that it's still stuck right in the middle of a range from the arc and the blue line. So there's nothing to worry about, but it's still, like I mentioned a few weeks ago, it still broke above the green line and it's building a new base, right? This is the most important thing to look at because it's never really done this before. It's never really started to build a tight consolidation new base before. And like I said in the past, this was like a bull flag and it went up, right? But it wasn't really building a new base because it went down and then it wicked below levels and stuff like that. But here, it's been holding this line really essentially for many, many weeks. And what that really is showing and telling is that it's just a matter of time, I think, in my opinion, that price will go up to the $200 level and possibly get rejected again because it's massive resistance, and then maybe come down and then finally break free. And when we put the cloud back on again here, it's getting thinner and thinner in this zone over here, like July, August, and whatnot. So could it possibly break above in the coming weeks and then test the bottom of the cloud in the low 215s or so? Well, if we put it back on our moving averages up there, what lines up with that level? Sure enough, like this right here, the 211 is the 100, 213 is the 50, and 230 is the 200-week moving average. So if this 200 level can be broken, there's still going to be massive resistance with these moving averages right here, along with the cloud that's getting in the way as well. So if by chance 200 can get broken, we're not free yet because of this resistance above as well. And let's just go take a look at Tesla on linear scale, lastly, just so we can see some things. And lastly, we can see the same thing that I've been showing the whole time on linear scale. The orange angle is ultimate support, and the blue angle up above is the resistance level in that same kind of zone, the 227, 220 area. And if the arc comes down, it'll be like the lower 200s as well in the following weeks. So this is more confluence that anything above 200 is going to be hard to break. But first, we got to get to 200, right? So don't count our chickens before they hatch, I guess. And another thing I introduced on X in regards to like Bitcoin or whatnot was the Gann box. So the Gann box actually has a little bit more precise angles that I wanted to show you right here. So let's just put that on and we'll take off the Gann square. There's the GAN box. So we'll delete that real quick, and we can see it starts at the same time. But it gives a little more angles of downward sloping and upward sloping. And this one includes an angle that sits right here, which is very interesting to see this angle. And now this is more confluence of the ultimate support zone. And that kind of even looks around like 174 now, not even 168 that was down here. So we saw that wick below right there, right? Last week. And that wick down to, what was it, 167.41. But it closed the week back above that gray angle. And so what we're really seeing with this GAN box is this angle has been right there, solid support the whole time, even wick down to that angle. And if this angle holds, then it'll have the opportunity to go up to that level that I was just talking about, the 220s or so. So it's looking pretty good for a final break above all those resistance levels, but not all of them, just the lower ones, right? The upper ones in the lower 200s and up to the 200 week at 230 still remain there. But this foundation looks really, really positive for a good development and a push higher. So just a little bit more patience, but everything's looking great. So nothing to worry about as of yet.